Welcome, everyone, to Name Confidential Live.
There we go. Hey, welcome everyone to Name Confidential. I'm this week's host, Ryan Redfern. Today we have Bonnie Gortler, coach, consultant, and author of Journey to Wealth, an awesome book. I actually have it right here. Very good book. Someone that I followed on Twitter. That's how I've kind of gotten to know her, and she has some fantastic charts. And a couple that I have implemented myself in my own, trading and in my own practice for managing money. So we'll get into that in a little bit too. It's awesome to have Bonnie here today. But let's start off by sharing the NAAIM sentiment index, as we always do. Find it. There we go. All right. This week, we're down to 76.85. Personally, I posted higher. I said 115 still, although it's going to be lower next week for me. But typically, when we see these pullbacks below 80, that is definitely a interesting sign. And I don't believe Bonnie is not technically a NAAIM member, so she wouldn't be a contributor to this. But is this something you follow at all, or are familiar with the sentiment index?
I am somewhat familiar, but I did notice the big decline in the index, and that
Right.
makes a lot of sense to me.
It really does. It really does. And Tom McClellan, who actually is one of the people who helped design it, if you didn't know, had an interesting chart here. It should be showing, right?
Yes.
Yes. Yesterday, showing that there's a negative divergence, and usually when there's a negative divergence from the NAAIM exposure index to the S&P, that's usually negative things follow in the future. So that's something to keep looking, thinking of in the future as we move forward. All right, enough about that. Bonnie, thanks for being here today. Let's talk a little bit about you.
Oh, hi, Ryan.
Hey,
Thank you for having me. I'm excited to be here.
of course.
And I specialize in trading. I managed money over 37 years, and I love charts.
I love
And
it.
I, my favorite indicator is MACD,
Mhm.
and Gerald Appel was my mentor. So I know a lot about the market. I've been around a long time. I love to help people. I love to help them build their wealth.
Yeah,
And safety and capital preservation and managing your risk is what's important.
love it. Love it. And it's always great to talk to people who were at the origins of some of these indicators that everyone uses, but they don't really know where it came from. And I think that's so cool that you've got firsthand insights and you were probably there when it was being developed. So it'll be fun to look at that with you.
I started like this particular MACD was started in 73. I started in 82,
Okay.
and I started all my charts I did by hand.
Uh-huh.
So I had no idea how to chart at the time, and I ran a newsletter, and I also then learned all about the market at the same time. So I did two jobs in the corporate world at
Yep.
once, and that's how you get somewhere. You work and you do things, but I fell in love right away with charts in the market.
Absolutely, absolutely. And that was back when technical analysis was really not favorable in the environment. It was really just fundamental and that was it. I mean, it was the outsiders were the ones who were doing the technical work. So you were a bit of an outsider, I would think.
Yes, but we were one who, my boss, we used one of the first people to use mutual funds.
Hmm.
And he used convertible bonds and he did mutual funds. And then we made the relationship in the industry and we moved money actively, as do the NAAIM members.
Awesome. Awesome. That's a great background and it's so good to have you today. So I know you had some charts. If you want to just dive in, I know you have them in presentation form. So if you want to share and we can kind of talk through some things that you like to look at, that'd be a
Okay,
lot of fun.
okay, sure. Thank you. Uh,
Love it.
okay, I have to share.
Got it.
Okay, so can everybody see that?
Yep.
All right, awesome.
The cube from
So
Q. Hmm.
yes, just as an introduction of MACD, Ryan did say that everybody probably knows the indicator, but just a quick view without giving all the mathematics. The signal line is 0, um, and you want to be below 0 for a fresh entry, and MACD here is in blue, and you want to cross the signal line which is in red when you have a cross, that's your buy. And it won't be at the bottom most of the time, but it will tell you that the move can end from the opposite direction when it was falling. And when you're above zero and you start to fall and you cross, you're going to get a sell. And these just yellow arrows to sells. Here are the buys. And I'll show them to you in real-time charts, and we'll have more fun with those. But I did want to give just a short little introduction on that.
Great overview. Great overview. And I never really thought about the zero line. I know a lot of people just look at the crossover as positive or negative and say that's the signal. So there's probably more nuance to it that you can give us as we look at these.
As we move on. And yes, I've noticed people do talk about that. There's definitely more risk when you're below zero, and there's more strength in the market when you're above zero. And it depends how far and what is the impulse of the moves from before. So I have here the Russell 2000, which is on top. MACD medium is on the middle, and money flow is in the bottom, another indicator that I will talk about. And Russell 2000, I think with today's decline, I believe we're down for the year. So this is a weak, one of the weakest areas. When this area, when small caps do join into the party and the rally, we should be able to have more of a broad advance than more than just large cap. And we just had a good advance. I mean, there's no doubt about that. But we haven't had a good rally in small caps in quite a few years. So here, with just MACD, you'll notice here this orange line, that's your zero line. And you'll notice I have a lot of different, circles and lines, but I find the strength, I find when you get a trend line that you add to MACD, this is breaking a downside trend line, and you get a break and you turn, you get a better move than if you just go up just a little bit. You don't go anywhere. You didn't break any kind of trend line, and then you fail. You barely went above zero. So the strength of when you're using MACD, and a lot of people don't look at that, but if it doesn't go anywhere, it's not strong. The odds of the move continuing are less likely. Doesn't mean it won't happen. No indicator is perfect. I do like to combine more than one indicator. So I do like to use money flow, and it's the money flow index, and that's a tool in technical analysis, buying and selling pressure. It measures the buying and selling pressure and uses price and volume. A lot of the trading systems don't have it, but some do, and when they do, I find it very useful. I didn't use it back in the old days till I met someone on Twitter, and he introduced me to it, and now I use it in all my trading, and I like it better on a shorter term than even a longer term. And when you hit 80, 80 is a key level. We don't always get there. That implies strength. I like to take off the table. You as a money manager, there must be times when you like to reduce your positions. I like to reduce my positions when I see that. I like to take partial profits. Could be early, but I'd rather sell early than sell late.
I love that. And one of the things, fascinates me because I use Money Flow Index 80 as a time to take profits for, especially for people who are taking money for living off their investments, right? They need distributions. That's a great time to fill that bucket, is when it's the S&P MFI is over 80. And I think it's fascinating that we use the same thing and probably came at it a completely different way. But it's neat to see, those coincidences, those things move in tandem. So
yeah, they do.
It's an excellent thing to use. It's neat to see you use it. So
I like it very much. And notice here, and this is a current chart actually through yesterday, not today, but money flow is declining. Stock price on the IWM was going sideways, and this is after 3 sell signals, because you do have preliminary sell signals in MACD often. I like to have more than one. I like to have some confirmations, and you did hit 80. and then you started to fall clearly. And now you're back at the moving average. And today we dropped below, and we're back more towards that 214 area.
Yeah.
Semiconductors. I love semiconductors. It's a leading indicator. When people buying semiconductors, risk is on. There's other indicators also that measure that. But yesterday was a pretty advanced warning a little bit that they broke their trend line. They were down about 2%, I believe, today. They've had sideways momentum in MACD. They also, and then they started to turn down, and look at that. We had money flow early hitting 80, and then on this go around, we failed to hit 80. And now we're just going down. So it's too early to say that semis are done. But I have another indicator. I'll wait till the end and just show you that there's some warnings in semis. If semis are not going to join the party or be part of the lead the party, that's an indicator to watch.
Like that. And there were several indexes that had that negative divergence between the money flow, the MACD, MACDs, and other indicators as well. We saw a lot of that through many, but it was so funny because I remember the second half of July thinking, I'm seeing all these problems come up and the market keeps going up. I'm like, I'm missing out. And that is one of the worst things to me, is when you have that feeling of missing out. And even for me, I get clients going, well, we get more invested. I'm like, we really shouldn't. This is a terrible time. Something is wrong underneath here, but it's just not apparent yet. And then we get today and it's like, there it goes all at once.
Yes. Clients want to be in when the market's going up. And sometimes you want to take something off and be less invested. They don't understand. And I understand. I had to talk to a lot of clients.
Yeah.
But if you go over, if the client and you know their risk tolerance level and what their plan is, and you have the discipline to do what they want. And sometimes we're not going to be in those hot stocks that go up 80% and 60%, because when they fall the other way, they're going to say, what'd you do to me?
Yeah.
Right.
Always.
And so, and it's normal attitude, or that you want to be in when they're going up and you want to be out when they're going down. I had many conversations like that. But you want to be there with everybody, and but you want to do what your client wants. You want to respect their wishes, and you find the way to do that.
Yeah.
And here, the longer term, this is just one example of what's going on in the longer term picture. And I know a lot of people on Twitter, a lot of people that have been reading, say that the market has a lot of room to go on the upside. Well, now I believe as of today, the short-term trend now is turned down. The intermediate has not, and the long-term trend is questionable. And we have more charts than just a semiconductor saying that.
Sure.
Here in semiconductors, you have a monthly chart. You've got higher highs, which we did make, and we've got clear lower lows potentially on MACD. So if you had a turn down, you'd have a very big negative divergence. But when I was saying that there's different speeds to MACD, how you can make it helpful. There's fast, medium, and slow. And I purposely picked something longer term to show how many times you will not hit the zero line. So you can speed up MACD. You could speed up the oscillator. And on the if you go to TOS, Schwab, any of the software programs, the default is medium.
Right.
So sometimes if you want to beat the crowd, go to fast MACD. But don't do that in a bear market, because if you're buying too early in a bear market, you've got a problem.
Love that.
In an uptrend, you want to buy fast and you sell slow. So that's why you get some of those the negative divergences. You get the repeat sell signals like we had earlier on the IWM. So here, this was just a fast, medium, and slow. And you notice you never hit. We have not gone. This goes back to 2017. We never went anywhere near zero on a monthly chart. But when you fall on a fast MACD and a monthly chart on an average that's been strong and that trends higher, which the market does, then know that you're going to get that opportunity, that opportunity, most of that risk is gone. You have some, but there's a good chance the risk is they're going to have a turn.
Right. So how do you get to these numbers that make your fast and slow MACD numbers? I mean, those are interesting, and I've not seen those settings before. So can you give some background as to those?
Sure. Well, you have a MACD is the 12-day exponential average minus
Right.
the 26-day exponential average.
Mhm.
Well, way back in corporate, there was all sorts of tests, and Jerry created the averages, fast, medium, and slow. And then they were testing, and we did not use MACD as to actually always buy and sell. We had because you need a numeric number. So the numerics on it to move a company's assets actively kind of need the New York index, the S&P index, something that gives you a buy and sell. But it was tested, and you get the idea of when is a good time, when is not so good time. But by speeding up you'll notice other people use similar numbers, but it's all back testing, and then it changes during time periods. But you could use it on a daily chart, an hourly chart,
Right.
and you just use the different ones, and they're there. You just speed them up, and everybody seems to use something different for what they want to do. If they're trading options, they don't want to be, they want to be out. If they're selling their options for a profit, they want to be out before all that premium disappears, right?
Sure.
And the turn.
Interesting. But you like the 9 is the last number on all of them, no
On
matter
all
what.
of them. You like the 9. Yes,
That's
he did.
fascinating.
Yes. And you can easily switch your settings depending on the
Oh,
market.
sure. I'm just always fascinated as how some people come. I've seen some people use like Fibonacci numbers as those, as like
Yeah.
8, 13, 5 is a good quick one. It gets interesting when you start diving in and playing.
Oh, yeah. Oh, yeah. You ever created trading systems, you play, you move them, and
Yep.
in trading systems, they work for periods of time, and
Right.
then you want to forward test, you want to back test, because there are times, that's why using more than one indicator is better than just using one. So you can have more than one model. Using one model, and if that one model blows out on you, what do you have? You have some very unhappy clients.
Absolutely. Absolutely.
One of my favorite indicators just to watch, and it's so easy because it's one number. It's what is the the new lows on the New York Stock Exchange doing? Is it
Yep.
above 50? Is it below 25? Is it above 150? Where is it? Just a few days we were at 33, which is a low risk environment. Whereas we moved up to 94 today, which was a little surprising to me. I thought it would take a while. We haven't been there in months. If you go back in April, you could see that new lows, they reached 1167. In 10 days, the market had fallen apart, and then the market rallied in a V formation, which is the hardest to actually trade.
Right. But I think this gave some insights as to when there was that retest, and this New York new lows was not there on that retest, which I thought was really interesting.
In here, we never
Uh,
went to 150.
Actually, the second half of April, there was a second. The market had the big sell off in the first half, and then it tried to rebound, and then the second retest, we didn't get new lows. I thought that was fascinating to watch, like in real time as it's happening. And you go, oh, okay, we may be done. We might maybe time to watch for the buy signals to start popping up, and they did,
And they did, wasn't
yeah.
it? And they did, and they happened pretty quickly too.
They do. So how did you come to these levels of the 50 and the 150? I think those are interesting.
Well, it went back to way back testing and looking
Sure.
at all new low data. And I actually still track new lows every single day. I have a spreadsheet and I track because I added up the 10 days and I get up to 70% or 90%. And we had continuation signals if we went and generated if you have when you have the advanced decline line, which I will show on the next slide,
Sure.
you have advancing issues. And I would take 10 days, add them up, then divide by the total. When you have more advancing stocks than declining stocks, that's bullish activity. And Tom McClellan actually developed the McClellan oscillator.
Yep.
And over the years, I was using that and I was tracking it by hand. But I went back and looked and I'm just going to go back to here. There are times, I mean, we even went it was one day, we went to 150.
Yeah.
So I like to have more than one indicator, but I don't like to buy stocks when new lows are going from 25, 50, 100, 150, 200. I don't want to buy until they start dropping, because stocks are going to fall so much quicker than the indexes. You want more risk, buy stocks. You want less risk, buy an ETF, which is a group of stocks. Much better.
No, I completely agree. And this is the chart that I got from you that I use daily now. And this is just, the more I dive into it, the more I'm just like, this is amazing for giving you really good sense of context of where the market's heading. It's just fantastic. It's one of my favorite things.
Good.
So thank you.
Good. And it's easy because
it is.
I like to make it simple for people.
Yep.
You know, when I teach, when I train, I don't want to give them all hard things. First of all, people won't do it. If you could show them little indicators, what to look for, they'll be much happier because it will be simple. Even in my e-course, it's how do you make things simple?
Right.
That's what you do. And this is one indicator. And over the years, market breadth, the number of issues changed. So you actually had to adjust. So I was in the field, and thank goodness for research people, and they adjusted the numbers and data changes. And, you know, my book was written many years ago, but this has stood the test of time. Same way as MACD has, I mean, 4 decades.
It really has. It really has. And I should add, I've gone through the CMT program as well. And in there, you pretty much have to learn and dissect every single indicator that exists. I came out of it with like 3 that you're go-tos, and MACD was one of them.
Huh? That's really nice. And it works.
There's a lot of work that's been done similar since then. It's still just not as good. Not from what I found.
No, if you found. Okay.
I love that.
You can use it for options. See, when MACD is falling and then starts to flatten, that tells you a story.
Yeah.
You know, people are accumulating puts, not puts. They're buying. If it's flattening below 0, you want to start buying calls. You know, you go in phases. You got to have confirmation on things, and everybody's going to use something different and what they're comfortable with. What I'm comfortable with may not be what you're comfortable with. My risk level may or may not be the same. And as you age, some of us, we want a little bit less risk. You know, it all depends where you are in your life and your lifestyle. And, you know, and you can adjust it and you still make money. Because I remember in the old tests, the more conservative you are, the more money you make. It's time. It's compounding your money. You know, that's what's important.
Yep.
This is the one that I stare at now, and I've been staring at, and it gave a little bit of warning. But again, nothing is 100% perfect, but relative strength ratios, which I know you do a lot of work with, I like to compare the SMH and the QQQ. And a rising line means SMH is stronger, and if it's falling, the Q is stronger. And we've had through this whole rally since April, SMH has been rising and stronger than Q. And a few weeks ago, it's just started to turn down. And even today, it was weaker than, semis look like we have peaked, even though we made a new high in the SMH. And it might be time that we're going to that we'll take a pause, and then ultimately we could rally again. But we have to see what's going to happen. We don't know yet. There's just too much outside noise, but it's good to protect. It's good to have an idea of what's going on. And relative strength, watching semis and Qs gives you some clues. Even back in April, this had fallen, making a new low, and then it flattened, turned up, and started to rise. When you use this on a daily, it's very whippy. Weekly, it gives you better. I like to use it even sometimes hourly. I like to see if I'm day trading, I want to see what's going on, what's gaining in strength versus what's losing.
Do you find this gives you good sense of other parts of the market as well, or do you specifically trade in this area when you're using it?
I like other parts of the market. I like to use this to know other parts. I use the IWM that tells me if we're going to be broad or not. But this is strictly technology. This is those hot stocks,
right?
Small positions. But I like to do that too.
All right, that's fair. That's fair.
Yeah. But it does help.
Well, I know as we're wrapping up and getting close to the end here, you have we always like to ask what your favorite quote is. I think that is your actually next slide, if I'm not mistaken.
It is. Well, first I want to say thank you, and thank you to for everybody for being here, and thank you for my invitation.
Of course.
And why not? My mentor, he taught me the most important thing. It is more important not to lose than it is to win. And that was from Gerald Appel. That is my favorite quote and my motto to live by. And I taught my clients that, and they understood.
Love it. Love it. Manage risk, your wealth will grow.
Yep. And I say that all the time, manage your risk and your wealth will grow. And that's how that's the most important thing in investing.
I love that. I love it. And I like in your book, psychology is such a big part of this, more than the indicators, more than all that. If your head is not in the game in the right way, this is very difficult. So I like that you spend a lot of time in your book on that topic. Kind of in the same way, manage your wealth, manage your mentality and your psychology.
Yes. If you're trading and you're not doing as well as you want, you had a couple losing trades, go out for a walk, go for a bike, go do some yoga, go relax, go find some peace, walk away till you get yourself back in alignment with what's going on.
Love it. Love it. And then finally, how do somebody get in touch with you if they want to I think you do coaching, which is awesome. If somebody wants to check you out and say, hey, there you go. There's your email.
Yep.
Charts. Ooh, you get some charts for you. That's fantastic. I love it.
It's Bonnie at BonnieGortler.com. You can email me there, put in the subject line 3 charts, and
cool.
I will do the charts you request, and you could set up a 15-minute conversation, and we will go over those charts. So we'll go back and forth. You'll tell me which ones you want, daily, weekly, monthly, and I will do it for you.
Fantastic. Well, that's a great benefit here. So hopefully people take you up on that. And this will be up for a while on YouTube. So it's it's out there forever, as the internet is forever. So of course, thank you for being here. Just for those who are interested, if you're a financial professional, the NAAIM Outlook Conference is coming up on November 3rd and 4th in Chicago. I know you're not a member. We may need to get you on as a speaker at some point, just to visit. It's just fun and hang out with chart nerds for a couple of days. It's always a good time. So, all right. Well, Bonnie, thank you for being here today, and we'll see everybody next week.
Thank you, Ryan.
Bye, everybody.